Good evening. This is the Elliott wave update for the S&P 500 for Tuesday, April 19th, 2022. And as I started last night, I thought it was a great day for the Bulls and the Bears. Well, today was another great day for the Bulls, or for those who had a bullish attitude or were willing to participate. Very good trading today. And I have made a slight change to the labeling within the minor wave one. I'll get to that in a minute. Let me just recap where we are because that has not changed. Today's beautiful 500-point rally did nothing to change my opinion on what is actually happening in the markets. It clarified the count once again. It allowed to, and we'll go into again, I'll go into that in a minute. But so we're still in the beginning stages of an intermediate third wave down. And that's a part of an initial primary degree A wave. So, or it could turn into a primary 5 waves. I mean, this could really be ugly. I don't think it's going to be a primary 5. I think it'll be a primary A that we reach once we get down towards the 2020 lows. Now, where are we? What's going on? So none of that larger picture has changed. Let's drop down so we can take a closer look at what actually took place today. What we have is still the intermediate wave 2 firmly in place up there at 46.31. Now, what ended up happening today, and as those that have been kind of listening and following me for a while, you know that I will constantly tell you that it is the market itself that is going to tell me what its intentions are. I just do the interpretation via Elliott wave. So that's why I continue to say as well that if the market is fluid, then we as traders also need to be fluid in how we want to choose to interpret the market. So because it's going to give us the hints, it's going to give us what's going on. And if we follow along with our Elliott count and keep it fluid as the market continues to tell us. So today, I left off from here we were yesterday, and I felt we needed a little bit more upside back above 44.11. And I believe I even allowed for the potential that we could run back up towards the 200 moving average. But there were other points in between, it's 21, 25, so onward and upward. So what did happen is that it exceeded all of that. And then it exceeded the 200. So, and it exceeded the top of wave 4, which at the time would have been, I believe it was, would have been the top of wave 1, minute wave 1, because minor 5. The minor 1 was up here. So the third wave of that minor 1 extended. And now I've gotten it down to that extension, put in the 4th. So this was a 4th wave bounce and then down to complete 5 waves of minute degree off of that high. So we're giving a little bit more confirmation that, yep, we're in a larger third wave. Simply because now we're breaking down, and it came down in 5 and we're going up in 3. Now, this particular wave, we need to allow for the possibility, number one, that there's going to be continued upside. Doesn't look quite that way right now as we reopen in the start of Globex, and we see that the S&P is down 20, then NASDAQ is down 130. We continue to kind of drop off the face of this particular chart. Now, what's all that? So we need to leave open, and I'll fill in those blanks very quickly. If we're going to count this as A, B, there's a strong possibility that we did already get that 5 waves up. I'll take it down to the 30-minute chart, and let's take a peek inside. That would be right here. 1, 2, 3, 4, 5. That could be wave C. Here is wave A. Here's wave B, Here's wave C. All very clean on a 30-minute chart, all following very nice Elliott. So that could be done. And if that is the case, then this tripping and starting to fall is totally in line with the pickup again of that larger third wave. So once again, if this completes minor 2, then we're going to be dropping off the face of dropping off the cliff. I want to just put in, that is already there. So I can show you more cleanly. We're going to put the retracements for a minor wave 2. I'm going to hook it up by going to the top of wave 1 to the bottom of wave 1, and here we go. So we can see, we get another little confirmation that there's a possibility that this does complete wave 2. Most common is going to be the 50% level for a second wave, and that would put us at 44.95. Second in line on popularity is the 382. It's 44.62. It exceeded it by a little bit, came back, and then now found resistance right below it. So, okay, we got up to a Fibonacci level. It could be over, but we need to keep in mind that this might be ABC A, and this is part of the B wave that brings us all the way back down to here, maybe even back down towards that low at 57. Now, that would include starting to break back below all the moving averages. They just broke and got turned higher. This is the type of move we're in. It's all corrective, and here we're corrective within the corrective. So, and we're confronting earnings. Today, Netflix, tomorrow, Tesla, both. Well, Tesla, definitely a member of the S&P. So, again, what we're also seeing is that while the market dropped because, or the NASDAQ for sure, and also, I believe, the balance of the market's down and the S&P, but Netflix, dropped the most, of course. But look at Tesla. Closed at 28, now bid 20. It was actually down quite a bit lower earlier, bidding 18, down a little bit. So it was down $10. I take it back, not quite a bit. It was down to bidding 2018, so it was already off $10. Then Microsoft down, closed at 285, bid 283.75. So they upped the bids just a little bit. Here we have Google, 25.75 bid, closing at 2,600. So you see, they're already starting to mark things down. Apple, down $1 on the bid. Down $1 on the offer. So here we go. That all fits. But so we could get this B wave to come down and we get another. They plow in for tomorrow's earnings, or maybe for Tesla, who knows? But we could see a return of the buyers because it's earnings week. Next week, we may even see it more. So again, we may stay within this box or continue to come within the box, rally up to additional highs for the sequence, not for the market, for the sequence. And this is the sequence. So we have to leave room for, again, a break back above 44.62, 63, a break above 44.95. So we could actually get above 4,500. We can. We just can't break 46.31. So we're again confronting the same thing we did here, but the count's telling us this is going to likely be the one that'll put in the challenge. We're into earnings. So for tomorrow, could be done. If it starts to break down, here's the scenario. It would be the start of a minor third wave. No matter what degree we are, we need to get into our heads that if it's a third wave, it within the sequence, and the minor sequence started here, it's going to be the longest and the strongest wave within the sequence. Wave one's already extended, so its third wave extended out into another third. So it does follow suit, and it does continue to fit. So definitely, if it's a third, we're going to start breaking down below these moving averages. The 50 we go down to the 30-minute chart. The 50's crossing the 200 here, but that's all I think should change. So on the 30, the 20, the 8, and the 4 all come back down below the 200, and the 50 starts and turns and goes back down. But right now we're kind of fiddling around, up a little bit, down a little bit. So, once that all calms down, and things get situated, then you're going to get a better idea. If this is all we get and they just start rallying it back up now, then I would be looking for a continuation of this, even though that looks pretty clean as a 5 waves up. So my guess remains is that they're going to want to take it lower, and then we're either into the next phase of that third, or we're in a B wave. So this would be ABC A, ABC B, and then we still get a C wave up. So it would be likely we would move down with a little interim rally in between and down. All right, having said all that, let's wrap this up. It does not look like it's going to be too severe right now, but we got to pay attention. Trading will be numerous. Trading will be fine on both sides. One thing that I want to make clear is that the mindset's going to be real important during all of this. And the reason being is that you get these little bits of what I'm going to call noise. Somebody come out and saying that, well, inflation's been tamed, interest rates are okay, everything's kind of already in, and we shouldn't have any threats from or towards the equity markets, that they should be fine. And I really was kind of like, really? Okay, I don't believe you for 1 second. The proof has not been revealed. So somebody's model was coming up with this. It's like, well, okay, I'm not going to fault anything. I just don't believe it, nor will I trade towards it. But that doesn't mean that it won't produce the second wave that we have. So, but there's nothing within that that's going to make me change my longer term view that we're in a longer term corrective phase. And in the beginning stage, we're 6 months from the high, the all-time high in the S&P 6 months ago. So I'm like, you know what, folks, that's nothing. And to say the correction's enough, and gee, bonds have gone down enough, interest rates are high enough, you've not lived. That's all I can tell you. So I don't want to make it a matter of who's right or wrong, or why is somebody bullish or why is somebody bearish. I go by the count. But when I step into the market to trade in the morning, the mindset is, I don't care if it goes up or down, I just hope it does both, with enough velocity that you can get in there and get out and get your stuff done and have a good time and make money. That's the name of the game. So it's not a matter of being right or wrong. It's not a matter of being bullish or bearish. It has to be a matter of trading, and then trading what's in front of us. So we're going to do that without regard, giving any credence, noise ability to the who, what, where, when, or why, so that you can participate in both directions. That's the rule, folks. Participate going in both directions. Make your money. You don't care why it goes up or down. You may have to care about a big picture on how it's going to affect you personally, but that's not the conversation you're going to have as you're watching the market. Can't. It's too distracting. It'll derail you. Focus on the mindset. The mindset is trading. And when you do that and you've got your rules and you play by your rules and you don't break your rules, you should be able to walk out every day positive and limit those down days. So if you have a down day, you've already got a rule. Below this level, got to be done for the day. Obviously, something's not clicking. You're not in sync, whatever's going on. So you'd be done for the day. But when you follow your rules and you have a goal of what you need to make on the day or what you want to make on the day, when you reach that goal, computer gets turned off. Go to a different account. I don't care. That particular account, you're done. You reached your goal. Take the rest of the day off if you can. So you see what I'm saying? It's like when you're trading with the correct mindset, you're going to make your goal. You're going to realize that the opportunities are coming at us in such large numbers. So you're able to just float with it. You're able to stay in the eye of the storm where there's calm. so that whatever happens, you're going like, oh, look at that opportunity. Boom, I think I'll take that. Oh, look at that. Kind of went right above that signal. That's a buy signal. I'll buy it. Don't be fooled. Everyone might think that I'm a bear, a perma bear, I've been called, and all of those things because I have a fairly strong downside correction. But it's like, no, that doesn't make me a bear. It just makes me see the market for what it is. It just makes me see the economic situation that we're in. And I don't deny that the country and the world are in trouble. And it's all based on junk that's not in our control. It's all based on, these are things that have been coming at us since 1981 and before, but primarily since 1981 when it comes to the interest rates. We cannot live in a world where interest rates are 0 to 0.5%, of which we can't participate because we're paying 20, 30 or more percent to borrow the money. Middle guy gets cut to shreds, folks. So we can't survive like this. And now the interest rates are going up. It's going to make it even more difficult. So, but it has to happen. The country cannot lend out any more money than it does at the rates that it's willing to do it. It's killing the economy. It's killing us as a country. So better to just look at it in a more positive fashion and not just look at it as a negative, because sometimes negative is just not nice. So I look at it as trading opportunities. There's a lot of people, now don't get me wrong, people want to trade. People want to trade options. People want to trade futures. People want to trade positions. They want to trade. They want to become involved. I don't care if they're bullish or bearish. And likely they don't either, because quite a few traders are doing the same thing that we all should be doing. We're just there to trade. We're there to make money. We're there to build up our own accounts, et cetera, et cetera. Okay, I don't want to go on too far. So plenty to do, whether you're a day trader, a position trader, a swing trader, whatever your style is, plenty to do. And I'm being dead serious about all of it. For tomorrow, leave open the potential that the market go up. Right now, it doesn't appear like that's going to come into play. But don't forget, today, the S&P didn't really start strong out of the gate. It picked up that momentum and it picked up that speed and then just ran for the brass ring. Okay, so that could happen again, and it can happen to the downside as well. So just be prepared and trade no matter what happens. Have a great trading day tomorrow. Our next update will be on Wednesday, the 20th.